o'clock, so I'll call our Finance and Investment Committee meeting to order here on, what is today, Monday, June 17th, 2019. And we don't need a roll call, so we'll go ahead and, I do have one speaker on item number 1, but do you want to open us up with anything, Glenn, before we have a speaker?
I'm just going to pretty much turn it over to Wes, and then Wes is going to introduce our presenter, and I don't know when you want to take Mr. Hunsaker's.
Okay. Do you have a preference, Mr. Hunsaker? Want to go before or after?
After.
Okay.
It's always useful to get the information first.
Then Wes, it's all yours.
Okay, so Shannon Ayala is here today with Davidson Fire, and as you know, last year, 2017, or 2018 actually, the committee was involved in the process of selecting Davidson Fire as our auditors. And this is their second year of the engagement. It's a 3-year contract with 2 options for extension, 2 1-year options, so a possibility of 5 years. So Shannon's going to talk today about the kickoff of the audit and the audit process.
It always blows my mind how fast this thing comes around every year.
Yeah, it's just like we approve the budget on a Thursday, we start talking about the audit on a Monday.
It seems like we just did this.
I know, we always feel guilty coming back the next year too, and it's always, oh, that's interesting.
Nice graphics.
I don't know what happened there.
Wes,
You give Wes some ideas for
note.
next year.
Yeah.
make a note. Graphics.
Yeah.
I know. Don't ask me what happened with that, I have no idea. Am I gonna be able to
Yeah, I
move,
didn't
oh, right here.
Get that for the board meeting, right, Mike?
Yeah.
So, I know, I do not know what happened with that. So yes, this is the audit. Oh gosh, the whole thing is weird, the audit, but it doesn't look like that printed, right?
No,
Okay.
printed fine.
Well, this is the
Yeah.
audit
Wanna
kickoff
reopen it?
meeting with a lot of weird graphics.
Let's see if
Oh.
we close it and reopen
Oh,
it.
maybe.
'Cause
I don't
noticed
mind
that
it.
I had it set up and then
Well,
when
the
I came
graphics
in
See,
here.
it
good.
looks right on there.
Yeah, that's weird.
Sit here.
Yeah.
Don't push us out of our
Oh.
comfort zone.
No, not yet.
Nope. Let's just run with it.
It's all
Oh,
good.
well, it's
Yeah,
fine.
no problem.
It's not gonna bother me if it doesn't bother
We all
anyone
have
else.
Staff's recommendation is that the auditors get a better PowerPoint.
Yeah.
Thank you.
I have to pay him more.
Right, exactly. We'll up our fee a little bit. Okay, so today I'm gonna talk about the SAS 114 planning letter, upcoming accounting changes, and then also the audit timing and procedures. So you all have a copy of the SAS 114 planning letter. Basically, the auditing standards require us to have 2-way communication with the committee about fraud and fraud risk, as well as the timing of the audit.
Where is the letter?
Oh, sorry.
Yeah, I can print it out actually.
Oh,
Okay.
well, I thought you might all have it, but if you wanna pass it around, I did bring one copy, sorry. It basically says, that we're required to have this 2-way communication. There's some specific items that ask, about possible fraud or fraud risk, if you have any knowledge of or suspect any, that you can communicate that information with myself or Jennifer, who's the partner on the engagement. And then it also talks about our modifications to our standard audit approach. So in there, we have on the second page, it'll say we're gonna do some additional testing in capital assets. And then also the district got a new actuary evaluation this year for GASB 75. So we test the census data and the underlying information that was provided to the actuary in order to come up with the liability and the other items that are reported in there. So we'll do a selection of, I wanna say, well, it depends on how many employees you have. I don't know. I'm not gonna say how many we're gonna select because I have to look at the total population, but then we test it for to ensure the information's accurate, the retirement or the hire date, birth dates, retirement date if applicable.
Is it usually percentage based?
Depending on the population. So if
So
it's
we're like
greater than 2, if you have
110?
more, 110 would be probably 20%.
But this is gonna be retirees as well.
Yes.
I think there's
Oh,
like
yeah.
18 retirees or something
Yes,
like that.
so we'll include the retirees in our population. And then each year after the first year of the audit, we're required to have an element of unpredictability in our audit procedures.
That's good.
So this year, we're gonna use our data mining software to perform a variety of tests over cash disbursements. The first one is going to be Benford's Law. And it's a really cool test. In previous years, we've only done it on the first digit of the disbursement. So each check obviously, has the number of digits, and it checks the first digit of each disbursement, and there's supposed to be a curve. So I don't know what the percentages are, but if it's 10% of checks are written that start with a 1, 20% with a 2, and so on and so forth. And then it provides a list of checks. Well, we had some more training on it, and you can actually do it on the first 2 digits, so it gives you a more focused sample, and it will actually provide us with suspicious transactions that we can look at. So we will review those
Really
and
cool. And then
You
test
just
those.
warned them.
But it's
They
very
have
good.
no idea what's
No
gonna come
idea
out.
what's
They
gonna come
already
out.
gave
We already
us
cut the check.
they already gave us
Thank you.
the population, so we're gonna be working on running that test. And then we also check for duplicate check numbers, duplicate check amounts, gaps in the sequence of checks, and checks that are written on weekends, and sort of look further into that information.
And then as part of your overall,
Like
like kind of when you come back to the board to present your findings, are you gonna be able to kind of touch on that a little bit?
Exactly,
Okay.
yeah, we'll provide a beautiful graph and everything. It's really interesting.
West
Um,
West graphs.
Wes does.
Pictures.
We're accountants, don't we all? And as far as the audit timing and procedures, we're actually have staff downstairs right now doing the interim field work. They'll be here until Wednesday, and then our final field work will be September 23rd to the 27th. Some of the procedures that we do out here this week while we're here is we update the internal controls. We'll follow up on the prior year recommendations that we had, which were in relation to IT and vendor management. We performed some disbursement testing, and then we'll also be performing the census data testing on the GASB 75 actuary report. And then there's some other, small things that we do, but this is the meat of what's done during interim. During final, we test all of the material, asset, and liability accounts, and we do that by sending confirmations for cash and liabilities, and then the other material, asset, and liability accounts will perform analytical tests and obtain substantive documentation on those balances. And then we also analytically test revenues and expenditures, and we will determine additional testing based on the results of those analytical tests. So they're working on getting our materiality, and we have like a materiality amount, and then we have what's called a low risk ISI. So normally anything above that low risk ISI amount, we look into whether if the prior year or if the current year increases more than that amount over the prior year, then we do some more tests on it. And we have not told them what that amount is.
We did not find out.
We're not super secretive about
$5.
it, but
Anything over $5.
yeah. And then lastly, upcoming accounting changes, so new governmental accounting standard boards issuances. So this year we're implementing GASB 83 and 88. So 83, I don't think you guys don't have anything that qualifies for 83, but 88 is debt disclosures for direct borrowings, which I believe there are 2. So that basically adds a few sentences onto the footnote disclosures for long-term debt and adds some information about terminations or accelerated clauses in there.
What other kinds of borrowings are there besides direct borrowings? What does that mean?
Direct borrowings means you went directly to the bank and issued debt through them. So the Union Bank loan.
So we have
Correct,
the
yeah.
2008 and 2012, which are a private placement loan and another loan through Bank of America and Union Bank. typically our debt issuances are muni bonds and such, so like COPS where you go out to the public and you look for funding from,
Are those called indirect borrowings?
those are
or-
indirect borrowings.
Yeah, public placement,
Yes.
correct. In the next fiscal year, we'll be implementing GASB 84, which affects fiduciary activities. Typically, the enterprise funds don't have fiduciary fund statements. However, because of the OPEB trust, this statement, or this GASB statement will probably affect the district, so we'll have to add 2 new financial statements for you to review.
And that was the funding of our OPEB through the CERC.
Yes,
Okay.
yes. And then in 2021, GASB 87 regarding leases. I believe that Jennifer was here this morning and we're thinking this is not gonna materially affect you.
Hopefully not, we may have the Xerox lease, we have to look at that and see what the rental portion of that is. Most of it's service-based, which is just operating costs, but we do have renting of machines, we have to see if that's material.
What about, like you have any cell?
We have this cell site rental, but that's
Yeah.
like $2,000.
Oh, okay.
So it ends up being like $24,000 maybe in a year, I think.
Mhm.
It doesn't change a lot for, I would say, like purchasing capital items, because you would already record an asset and then the related liability, but for cities and water districts that have like a lot of rental income, then you have to record a receivable on your books for that rental income and then like an offsetting liability
Maybe in the
or
future.
something.
Right.
Yeah, if it's material, it does take materiality into account.
Out of curiosity, how many Gatsby's are there still coming?
Well,
Every year they
they're
add
up
some more.
to number 91
Okay, so
right
we got,
now.
87 is the only one we,
Well, that's just the next 3 years. All of the other ones are in the future, so we don't want to like
Oh, so
explode
they're
your.
coming.
We don't want to
Yeah.
explode your brain with 10 more new Gatsby's.
thank you.
Yeah.
Make it look younger.
I see much better.
Yeah. So we're up to 91, and there's more in the pipeline. So
They never stop working, it's
I'm
crazy.
curious when it's going to get to 100.
What's the high level for that? Was it GASB 83 for the asset replacement?
Asset retirement,
Retirement.
obligations.
Yeah, so what's
Yeah.
that kind of getting at?
I don't know all the details
Put
of
you on
that
the
one.
spot.
Thanks. Yeah, I'd have to look into it because it doesn't affect you guys, and I don't have any clients. I don't think that it affects. So I haven't looked into details of it.
But that last one, that 87
Uh-huh.
for leases, that goes
Mhm.
both ways, whether we're leasing something
Mhm.
from somebody
Yes,
or leasing a
yes,
district asset out.
Yes,
Okay.
it's a lessee or lessor transaction. So, and with that, I can answer any questions.
And before we get to questions, we have one public speaker on this item, Mr. Hunsaker.
Okay,
It's all yours.
let's see. We have a reimbursement policy for facilities. For example, a pipeline, a sewage pipeline in the North City District was constructed by the developer. Then they are in line for reimbursement from the district for whatever capacity is above their use of the pipeline. So we have a future liability against future capital fee structures. I was wondering how that was being handled in the accounting, that liability.
So it's probably for Glenn or maybe even
That's probably
James,
what-
but I guess my clarification is, can you just clarify what he's talking about as far as the line and the
Well,
capacity and?
So sometimes when a development goes in, they're required to construct say a sewer line that will handle their capacity. But it also may be a line that handles other capacity.
Mhm.
And so we'll ask them to upsize the pipe. So if they're gonna build something, we'll say, build it larger to handle the region. And they'll have to pay for their share and we'll reimburse them for upsizing the pipe, so to speak.
Mhm.
So I think is that what you're referring to?
Right,
Mr.
and they
Hunsaker?
have up to 20 years in which to apply for the reimbursement. As the ordinance is written, we have to collect from the new developments the fees in order to refund them. So I'm asking, how is that reimbursement program handled on the list of potential liabilities on the balance sheet?
Yeah, so the mechanics of how it's handled internally and how it's handled from an accounting perspective, I don't know the latter, but the first, I think you're right, is that if the developer built it and subsequent development just stopped, we're under no obligation to reimburse them unless we're getting revenue from future
Right.
development. So mechanically, that's how it happens, and from an accounting perspective, I don't know, I guess I'll look to Wes.
Yeah.
We may need to do some more research.
Yeah, and I'm pretty sure it's just gonna go in the CIP until it's finished for any cost that we incur. So it would be hitting an asset until, a work in progress asset, until it's completed. When it's completed and we own the asset, then it's gonna be capitalized and begin depreciating. But until then, and we record the cost that we pay for it, so if we're paying them for whatever cost plus to upsize the pipe, that entire amount would be in the asset and in the cost of the fixed asset that we capitalize. And I think Shannon can.
And there's a question of whether or not there's interest and whether or not they're refunded the amount that is paid in, which is probably gonna be higher for capacity than what they built. Do they get the old refund capacity fees, or do they wait 20 years and get the highest capacity that might be built at the time of their request for reimbursement? They're not obligated to immediately get that reimbursement. It's when they apply for it that they get it. And if you got a 3% minimum inflation escalator per year, that can grow pretty heavily. And if you have other capacity fee increases on top of that, the question is, how much do we refund?
I would have to look into that.
Yeah,
That's
it's a
great
complicated
question.
issue, but it has not been raised. The other issue is that the district has the option of when someone uses more water than they're supposed to either sell or lease capacity. And this is for wastewater and for water. And I haven't seen any consideration of just how that is to be handled. And if it exists now, because I noticed in one development, Windward Apartments, they bought capacity at the least rate fees, and that seemed a little strange to me. And even the lease fees were very high. Then the third question is whether or not the capacities fees for large apartment developments are being properly collected.
Do your questions relate to the audit, or are they just unrelated?
Yes, they are all audit issues. And I would just wanna put them on record, so if those aren't looked into, there's gonna be some liability like spread around.
Okay, thanks for the questions, and we'll
We'll look
have
into
staff
it. Yeah.
look into it and respond to you, Mr. Hunsaker.
Last question, deferred payments, we have deferred capacity fees. Seems like we should be aging those and making sure that they get paid. Thank you.
Okay, moving on to, do you have, okay, so now that we're done with the public comment, Director Mr. Martin, do you have any
I don't
questions
have
for
any
our
question
auditor?
at all. They did a great job last year, they found some things, which is better than our previous auditors.
Yeah, I think I'll echo that. I don't have any specific questions, but I think this is the third different auditing firm that I've been involved with since I've been on the board, and I remember being really impressed with what you guys did last year. And I know it's probably great when nothing's ever found, but I always like to try to, you try to get better through these things and continuously improve. And I'd actually kind of like it when you guys find something, so go find something.
Dig deep.
So,
Right.
We had a kickoff meeting this morning with Jennifer.
Yes.
And she did talk about how they dig in, and I encouraged her to dig in and keep doing what they're doing, because we want to do it as well as we can, as accurately as we can. So we have conversations where we talk about accounting policies, whether we should change things and why we should change them. And while I do get a little bit of pushback usually to make make sure that I understand what we're changing. It's not necessarily negative pushback, it's just making sure I understand what we're doing before we do it. And they are doing a good job of finding that stuff and bringing it to our attention if there's anything that needs to be
Great.
changed or
Very
improved.
much.
Thanks.
And as far as timeline, are we gonna have any more finance meetings about the audit between now and the final, or is
I
it
don't
just gonna
believe
be
so.
come back to the full
Yeah.
board?
So there aren't any planned right now. Field
Okay.
work starts in September. If you'd like, we could schedule something for September, possibly give you an update on field work status.
Well, we'll
but-
probably have a finance meeting in September anyways, so if there's something that is relevant, then we can utilize that. But I don't know if we need to necessarily schedule anything specific.
Just
unless you have
incorporate it
something.
in one of our
Yeah.
regular meetings.
Cool.
Thank you, Mr. Chairman.
Okay. Well, thank you so much.
The gavel.
Yeah.
Thank you.
You can
Well,
take
our
advantage
meeting
and take off.
We
All
still got,
right.
yeah, we still have one more item. You're more than welcome to stay. It gets really, really good right now.
Yeah.
Yeah, right.
You know, if I get back down there, or do you want
I
me-
think I can figure it out.
Yeah.
All right, thanks. Let me know
Thank
if you
you.
guys need anything else.
Thank you very much.
Do you have a card?
I do, down in my purse,
And
let me,
individual.
Go out.
Can I please keep
Leave it
doing
at the front desk and I'll pick it up.
sure, I will do that.
Moving on to item number 2, cost of service study update.
Okay, as the board knows, we routinely do a cost of service study, and they usually cover a period of time. The last one we did covered a 2-year period of time. We had and it resulted in rate increases, 2 rate increases, the last which went into effect January 1st of this calendar year. So unless we do anything differently, those rates will stay in effect from here on out. So we do the cost of service study to take a look at what revenue we need to run the operation, and the rate consultant makes recommendations. So that's the process that we're in right now, is trying to get that consultant on board to take a look at our rates.
Okay.
Are we
Great, Mark.
planning to do that every 2 years?
That's one of the things we want to talk to the board about. The last time we decided to do a 2-year rate increase, we previously, before I started, it was always a 1-year. We looked at it every year. I would recommend that we do it at minimum every 2 years.
2 years.
There are ways you can do it as long as 5 years. The government, the laws allow you to go as much as 5 years between rate settings, so that's something that we would like some input on. But, so Wes can give you an update on the status and how we are in getting a consultant on board, but broadly speaking, we're trying to get the consultant on board, get the work done, conduct the 218 hearing, and have be able to increase rates if they need it on January 1 of 2020. So with that, I'll turn it over to Wes.
So, unfortunately, this should be a short update. We sent out RFPs to about 17 consultants. We received 2 proposals. We followed up in calling the remaining consultants that didn't respond and asking why they didn't respond to proposals and getting their feedback on that. I think a lot of it had to do with the scope and the timing of it, and possibly not thinking they can finish it in time. So at this point, we're going to be looking at the 2 proposals that we received, going through our rating criteria, and picking one to bring in and to begin negotiations on, possibly sort of modifying the scope to limit it a little bit, because I think there was, in saying a full cost of service study, there's some stuff in there that looks like we don't really need them to do. So in order to cut costs and hopefully the time involved in the process, we're hoping to kind of negotiate with the chosen consultant on the scope.
Yeah, let me clarify that. So it's not that we're asking them to do things that don't need to be done, it's things that we could do internally. We could do portions of it internally and relieve the consultant from doing that. And we think we have the resources to be able to do that. So we can reduce the scope of the work the consultant will do and supplement it with work that staff will do.
Have we not done a cost of service study since the change of management?
We have not,
Okay, so that's a good reason.
and
to
that's
do
the
it.
reason why we're doing it.
Okay, makes sense.
The last one was prepared internally.
Yeah, yeah, no, it makes sense, thank you.
And, yeah.
Answered all those questions real quick.
Okay.
So that's pretty much the update, and the idea is to get a full cost of service study, hopefully a rate model that we can own going forward. And we won't necessarily need a new full cost of service study every 2 years. That'll be, at the board's discretion. But I think it's necessary now in order to develop the rate model that we can use and develop our rates going forward. So pretty much the update as far as the cost of service.
Do you have an approximation of what a cost of service study would cost in this day and age?
Yes.
Roughly.
We have two proposals, right?
Yeah, roughly, the proposals came in, I think I'm okay at saying.
Yeah, just don't assign which one was which.
Okay. So they're both over $100,000, and we would like to get it hopefully more in the ballpark of, say, $80,000 or so.
And you think the majority of people haven't responded because they were gonna have to do it in too tight a time schedule?
Yeah, that's the feedback that we received.
Yeah, which surprised me, because most of those consultants, they tend to have a methodology and approach that they employ. And I wouldn't say they're quite cookie cutter, they're custom for each agency, but they're not reinventing the wheel with everyone either. So I didn't think the time would be that big of an issue, but apparently the market's telling us it is.
Yeah, we added more consultants afterwards, and we actually emailed them the RFP to hopefully get more submittals, and we still only received 2 total.
And the cost of service is the basis of doing the 218.
Correct, it's the rate structure.
Right, so we have to have that.
That's the legal basis to go through the
We-
process.
We could develop it internally, but then we'd have to spend the time and resources to develop our own internal model, and it's almost better and more defensible to have it done by a consultant from the third party.
I like the idea of having it done by a third party, especially since we haven't had one done by a third party in a while, and we know that with the last finance leadership, there was a lot of issues. So I think it would be good to have it done by a third party.
I agree.
And just to clarify, if we don't get it done by January 1st, that doesn't mean we don't have a rate structure. We do. The current rate structure would stay in place
Right.
until it's replaced with another one.
Right.
So our goal is to have it in place by January 1, but it's not a drop dead date.
And doing a current one, we may have reduction.
Possible.
Theoretically, yeah, it could happen.
Could happen, you don't know until you see the study, right?
That's right.
Cool. Anything else?
That's it for the cost
I
of
just want
service.
4%.
Yeah,
I'm thinking it out loud.
I
I can see
here.
in your eyes.
Our original plan was to
3.5
bring the
or 4.
consultant,
Yes.
the selected consultant here.
Here,
We were
to
hoping to
this
have had
one.
them on board, but with getting such a small number and just the demands of the budget, we weren't able to meet that, so.
I would like to, I don't know if it fits in the timing, but if we do have what month is it? June. So if we have a July finance meeting, which is gonna be hard to squeeze in, but if we can squeeze one in, I'd like to learn a little bit more about how they develop their rate structure and just kind of learn more about that whole 218 process, so.
Yeah, in July, I think, and I'm gonna get it, they have a, up in Riverside, a 218 class thing that I'm hoping to go to. I've already mentioned the West.
Yeah.
So maybe we
The whole
have
cost of
our
service
meeting
study.
right after you have your class.
There we go,
Yeah.
Mike can teach us.
You can teach us with your pointer.
Yeah, because there's a lot of stuff like General Manager Brown was saying that we can do internally. I can do all the statistical stuff, so that'll save a lot of time and money on the consultant stuff. So that we didn't see any need for them to do the statistical stuff. I have all that. Like
Do you
200.
think you'll have somebody in July?
I hope so. We're gonna be time crunched if we don't, so we're doing our best.
Okay. Yeah, well, we can probably move the meeting up to whenever necessary. I'm assuming.
Once there's probably gonna be a lot of vacations in July. I know I'm gonna be gone for 16 days.
Really?
Oh, wow.
So
Where are you going?
just gonna hang out at home.
It'll likely be an item that requires board approval, so
Sure.
my signature authority limit is 50,000, so it'll likely be over
Ah,
50,
yeah.
so it'll have to go to the board
So it
for
has to
full
be a
approval.
board meeting.
Mhm. Yeah, it doesn't mean we can't have a finance committee meeting leading up to it, but the actual approval, award of the contract will have to go to the
Right,
board.
if we wanna do it in July, we only have 2 meetings in July, so.
Yeah.
Maybe the 17th if it happens then.
The second meeting, yeah, second meeting is 17th. You here on the 17th?
No, but if it's just to approve the contract, that's fine. As long as I just want to just more for my own personal knowledge, learn a little bit more about it. But we can do that in a different meeting. If you're just approving the contract, then
Yeah.
that's okay.
Cool.
Okay. All you had?
That's all I have.
Future item, Mr. Chairman, if we're time for that?
No, other business. We're on to other business now.
A future item, I'd like to see either at the finance or, and I know we saw it briefly up on the board, but I'd like to see our budget to actual year end for the last 10 years.
Oh, yeah, absolutely.
And I know it's on his computer already, but, you just see the amount.
I'm gonna steal Mike's thunder on that one, it's on my computer.
Oh,
Yes.
okay. You just see what the amount is, and I'm assuming it's always been over, but I like to see what the amount is.
There was a couple of years it was under, we actually spent more than we budgeted one.
Really?
Yeah, I think so, just before I started.
Yeah, I
It's
have
just-
that.
Before you
Yeah.
show it, well, that
So,
makes sense.
so if you want a simple graph, that's pretty easy.
Yeah.
If you want an explanation year
Yeah.
by year, then that's a little
No,
bit
no,
more
no,
work.
just simple, just,
Okay.
just looking back, just
Yeah.
very simple,
Yeah.
very basic.
Yeah.
So
Don't go crazy.
at the first finance committee meeting for the budget, we actually had 6 years, so I'll just add another 4 to that and give you 10.
And I saw it up there, but I wasn't fast enough to, on your slide to figure out how much it
Oh,
was.
yeah, I got you.
So like, God.
Any other business?
That's all I have.
Okay.
Okay, we'll move to
I
adjourn.
don't know if we wanna talk about future items.
Sure.
One of the things we might wanna bring is the overhead rate. So now that we've approved the budget, the overhead rate would next, usually bring it before the committee, and then we bring it to the board. So for a future meeting, I was kinda hoping if we have a meeting in July, we could present
Yeah.
that.
Okay.
Sounds good.
Is there a date by which it has to be approved by the board?
No, not really. I mean,
Okay.
it should be in for the next fiscal year, but, based on, it doesn't fluctuate much, so it doesn't really have too much of an effect. And I already know what it is for the coming year, so if we get it in for July 17th meeting, we'll be okay.
Okay.
Must be much lower than now we have all our electricity coming from solar.
It did go
Our
down.
overhead rates dropped considerably.
It did go down.
Yeah, $264 last time I looked at it, really.
Watching the day by day?
Yeah,
Yeah.
it's like, oh yeah, okay. Well, as long as I have to wear my sweater.
Okay, anything else, guys?
Thank you.
Okay,
Very
we're adjourned.
great. You guys
Good
are
job.
amazing.